Welcome back. Now we shift our focus to the local bond market. The 10-year South African government bond hovered at lows last seen in 2021, with yields reflecting improved investor confidence in South Africa's fiscal outlook and inflation expectations. Head of Fixed Income and Portfolio Manager at Sanlam Investments, James Turp, joins us now for a look into moves in the bond market. James, thanks so much for your time this evening. I think let's start with that infrastructure bond that was launched. How significant is it for the country's funding when it comes to our infrastructure plan, right? And what does it signal about Treasury's broader shift from consumption to investment spending, which was something that was highlighted in that midterm budget earlier this month?
Hi, Tarling. Thanks very much for having me. And that's a great question to kick off with. Of course, that's been a long time coming. And of course, it certainly sends a good signal that they have earmarked, of course, an infrastructure bond. And by all indications, there will be significant demand for this asset. And because there are certain benefits for certain investors for holding this type of debt. So yeah, it's something, of course, South Africa is desperately in need of in certain areas, infrastructure work. And so yeah, this is a great sign, I think. It'll be interesting for us as bond investors to see the level of demand as it comes through and where it prices as well, the cost of that funding. So I can't wait to see that.
All right, we'll be tracking that closely. Now, James, since last week's rate cut and the shift to a 3% inflation target, have we already seen the bulk of the rally in bonds, or is there still meaningful upside to it?
A question we're getting across the board at the moment, Tarling, because South Africa has really had a strong performance. I think we're closing in on 20% all bond returns year to date. That's phenomenal. I didn't come into this year thinking we'd follow last year's great performance with another even better year. And so that's why investors are asking exactly that. And the feeling at the moment is, sure, we've rallied hard, but is there more to come? And you've got to consider, well, what is the direction of interest rates from here with a lower inflation target, presumably lower still if we get that right, and the market is indeed discounting just over another 2 interest rate cuts in the cycle. And so that would suggest holding on to bonds still makes sense with lower inflation still expected. Our economists even saying inflation, excluding administered prices, is below 2% in most areas. So low inflation, and then just on top of that, we've got a big bond maturity in December, which will have some cash in the market, which usually will need to be redeployed. And then coupon payments as well in December and in January should mean bonds remain supported.
So bonds are in vogue. James, let's leave it there. Thanks so much for that quick update. That was James Turp, Head of Fixed Income and Portfolio Manager at Sanlam Investments.